Hello, everyone, and welcome. My name is Lauren Jack, and I will be your moderator for today's session on cartels and criminality. Here at the Institute for Financial Integrity, our mission is to empower the professional community to protect the global financial system through cutting-edge education and training, including through hosting events such as today's. So thank you all for joining. I can see in the chat from all over the world, so thank you. So this topic that we're going to be covering has been at the forefront for about a year now. And this webinar is actually the second we're hosting on the threat, as we received a lot of requests for more coverage after our first session last August. Today's discussion, unfortunately, could not be timelier, given the widespread violence we've seen just over the last few days, unleashed by the Jalisco New Generation cartel in the wake of their leader's death on Sunday, alongside 8 other cartel members. Over 250 incidents have been reported across 20 of Mexico's 32 states. The attacks shut down much of the country, forcing the cancellation of flights, school classes, buses, and left many locals shocked at the reach of the cartels. However, the fact that we have over 1,000 attendees joining us live right now from 47 countries shows us that their true presence and reach is so much further than at home in Mexico. It is global. So before we dive in, let's cover a few housekeeping items. Today's webinar is being recorded. Tomorrow you can expect an email, including the link to the recording if you'd like to share it with a colleague or forward it along. And please feel free to submit questions throughout the session using the Q&A tab on the right-hand side of your screen right next to the chat. And of course, thank you to those who submitted questions ahead of time. It's always helpful for us to see what's on your mind, and we have worked some of them into our discussion already. Without further ado, let me introduce you to our panelists. We are joined today by Himamauli Das, Senior Managing Director and Counsel at K2 Integrity. At K2, Him helps clients navigate geopolitical, legal, and compliance challenges with a focus on the rapidly evolving economic security landscape. Him most recently served as the acting director of FinCEN, where he oversaw the continued expansion and refinement of the US AML regime and represented the United States before the Egmont Group and with FIUs globally. So we're thrilled to have him join us today to share his expertise. He is currently dialed in from Mexico City, so he's very much our boots on the ground on today's topic. We're also joined by my colleague, Catherine Woods, an Associate Managing Director here at the Institute for Financial Integrity. Based in our Washington, D.C. headquarters, she's IFI's subject matter lead on cartels, Chinese money laundering networks, illicit procurement networks, and emerging technologies such as digital assets. Her career includes over 20 years in senior and specialist positions in global banks and fintech startups in Australia, London, and Hong Kong. So if you'd like to learn more about either of our speakers today, feel free to click the speakers tab in the top menu for their bios. So we have an ambitious agenda for our 60 minutes together, and we're aiming to cover several key topics during our time today. So first up, we're going to review the cartels, including the sources and scale of their revenues and activities. Next, we're going to see the responses from the US and Mexican government and assess the implications for financial institutions and other key stakeholders. We'll then explore the methods cartels currently use to launder funds, including the shift to outsourcing to so-called professionals. We'll then turn to taking action, highlighting key regional considerations, in particular for those of our peers in Mexico. And then we'll address any questions submitted and conclude with an outlook at future trends. We typically do Q&A at the end and always seem to run out of time. And so we have switched things up today to ensure we are answering the questions you're asking. So please be sure to submit questions in the Q&A area. So let us start with the basics to lay the foundation for our discussion. Him, thank you again so much for taking the time to join us. Could you please kick us off by walking us through who are the designated cartels?
Thanks so much to the Institute for Financial Integrity for inviting me to participate. also, kudos to Catherine on her report. It's an excellent discussion of money laundering trends and typologies. And if you haven't read it yet, I would highly recommend it. As Lauren mentioned, I'm in Mexico City this week. And I think the events of this week signal the importance of some of the issues involving cartel activity, their reach across Mexico, and the importance for financial institutions, businesses, companies to understand the risks associated with cartel activity and the money laundering risks associated with those cartel activities. It is front and center in the Mexican environment, both with the government and the private sector. And it is front and center for the US government as well in terms of their overall effort. I will be very brief on this part of the discussion. In February of 2025, the U.S. State Department designated 8 cartels as foreign terrorist organizations and as specially designated global terrorists. I think that the designation of these 8 cartels, much of which duplicated existing designations under other authorities in the United States, signaled a critical point that the U.S. government was taking action with respect to cartel activity in Mexico and in other countries as well, very seriously. And it's been part of a broader effort with respect to law enforcement and money laundering risks and other points of engagement between the U.S. and Mexican governments. 6 of the organizations that were designated by the United States as foreign terrorist organizations operate in Mexico. They each have particular regions that they primarily operate in, but across the board, they are present primarily throughout the country. The cartels launder an estimated $800 billion to $2 trillion per year using a number of different channels. They're diversified businesses, in fact, and they engage through a number of predicate crimes, from illicit drug trafficking to wildlife trafficking to timeshare fraud and fuel theft, among others as well. And Catherine will cover many of these areas. I think the point with respect to the FTO designations and the SDGT designations that are most important is that they signaled the beginning of a continuing effort and a collaborative effort between the U.S. government and the Mexican government in terms of pushing forward and taking action with respect to cartels. The FTO designations clarified and brought to the forefront the importance of these cartels, these 6 cartels, and it created new sources of legal liability for both U.S. and foreign financial institutions that they faced criminal law enforcement liability for providing material support and services to the designated cartels, and also that they potentially faced civil liability for knowingly providing or aiding and abetting cartel activity as well. And so it's an additional risk that both global financial institutions, global corporates, but also ones that operate in the US and Mexico need to face.
Great, thank you, Him. So, Catherine, can you please provide us more detail on these sources of illicit revenues and the scope and scale here?
Yeah, absolutely. So cartels and other organized crime groups generate revenue from many illicit sources. We've got some examples of those and some of the scale of them on this slide. So they include illicit drug trafficking, human trafficking and smuggling, illegal wildlife trade and illegal fishing, illegal mining and mineral smuggling. And that relates to extractives like gold, silver, iron, coal, diamonds, emeralds, and rare earths. Obviously, rare earths are a key priority in the current environment. And illegal mining is closely linked with labor exploitation, human trafficking, and other types of environmental crime. There's fuel theft and oil smuggling, service fees and corruption at ports, extortion and taxation of local economies. So basically, wherever there is value being generated, cartels will seek to intervene in that supply chain to extract money. Weapons trafficking and procurement. Not only is this to generate revenues, but those weapons are also used against Mexican law enforcement and military and government. And we saw some recent examples of that over the last weekend. Timeshare and investment fraud, again, a very timely one. OFAC issued designations just a few days ago covering 5 individuals and 17 Mexican companies associated with a timeshare fraud relating to a specific property in Mexico. And just as some indications on the scale of these kinds of illicit revenues, over the period 2020 to 2024, $1.4 billion was reported by financial institutions, suspicious transactions. And these were just ones relating to fentanyl, not relating to all organized crime activities, but 1.4 billion in suspicious transactions just relating to fentanyl trafficking. Cartels earn an estimated $13 billion from human smuggling. That data point is from a couple of years ago. Mexico receives about 20 billion in illegal fuel imports, and global mining globally generates about 12 to 14 billion dollars in illicit revenues. So these are just a few examples of the scale. Obviously, some of the limitations are that these are illicit flows. The objective of these criminal networks is to hide what those flows are and how much they're worth. But what we can say clearly is the scale of them is immense. And for more detail, there's a lot more detailed analysis in the report.
Thank you so much, Catherine. So we've identified the designated cartels, we've reviewed the problem, obviously significant, and governments have been responding to this threat as such. So Him, on to you. Can you please walk us through the actions governments are taking in response and why these moves are significant?
Yeah, thank you for that. Again, the U.S. government primarily has taken a range of additional noteworthy actions in its efforts to combat cartel activity and fentanyl trafficking as well. All of the actions are important in part because they're important to understand the actors that have been designated to ensure that you as a financial institution or a company do not engage or manage risk appropriately with respect to the various actions. But they're also important points of information to be able to understand red flags, typologies, behaviors, both with respect to real risk associated with cartel activity, but also enforcement and regulatory risk. The first is that, as Catherine mentioned, there have been a number of OFAC derivative designations that have flowed from the designation of the Mexican cartels as FTOs and SDGTs. And these include networks engaged in fentanyl trafficking, fuel theft, armed trafficking, extortion, kidnapping, money laundering, and timeshare fraud. I think there are 3 themes across each of these derivative designations. One is just diversification of revenue streams, as Catherine mentioned. And it's important to consider all aspects and all types of economic activity as potentially implicated with respect to cartel activity, and that's an important point. A second point is just the use of front and shell companies. Cartels create webs of interconnected shell companies to hide their beneficial ownership and launder their proceeds. A third is just use of multi-jurisdictional money laundering networks to launder the proceeds of their crime. So there are OFAC derivative designations. A second important action was FinCEN's action in June of 2025, where they identified 3 Mexican financial institutions as primary money laundering concerns under an authority called the Fend Off Fentanyl Act. They identified a number of different typologies that were associated with those Mexican financial institutions as primary money laundering concerns. One is that the institutions were seen to facilitate payments on behalf of Mexico-based companies for the procurement of precursor chemicals from China. There were transactions involving facilitation of funds transfer processing on behalf of China-based companies involved in the procurement of precursor chemicals. There were financial services provided that facilitated transactions through money mules for money laundering. And then there was direct provision of financial services to drug trafficking organizations. And again, I think the designation highlighted the fact that the U.S. government is willing to deploy a broad range of tools to be able to combat money laundering. And it provided an important signal both to U.S. and Mexican financial institutions, as well as the Mexican government, that there should be increased focus on effectiveness and supervision, enhanced AML controls, and greater and more effective information sharing as well. There was a additional FinCEN action in November of 2025 where they identified transactions involving 10 Mexico-based casinos to be a class of transactions that constituted a primary money laundering concern. And effectively, those casinos were affiliated with the Sinaloa cartel. And the NPRM that was issued, along with the identification of those casinos, prohibited covered financial institutions, effectively U.S. financial institutions, from opening or maintaining any correspondent accounts that are used to process transactions involving any of the Mexico-based casinos. So, that represented a broadening of the aperture beyond just traditional financial institutions in terms of the scope of FinCEN's actions, but it also represented a broader use of authority. So it was Section 311 of the USA Patriot Act as opposed to the Fend Off Fentanyl Act. In addition, FinCEN has issued advisories around Chinese money laundering networks that identify a range of typologies and red flags. It issued a geographic targeting order with respect to the southwest border that requires money services businesses, such as exchange houses, to file CTRs, currency transaction reports, with FinCEN for cash transactions between $1,000 and $10,000. And then all of this is occurring against the backdrop of the IEEPA tariffs that were initially imposed on Mexico, Canada, and China in early February 2025, in part to seek to gain leverage with respect to efforts taken by those countries to combat fentanyl trafficking. And while those tariffs have gone through several modifications, and the Supreme Court decision last week and the ongoing USMCA review changed the nature of the imposition of those tariffs, they point to greater uncertainty and greater likelihood, potentially, that sanctions and FinCEN authorities or other authorities could be used to gain leverage or demonstrate U.S. resolve in action with respect to combating cartel activity. So I think it's very important to pay attention over the next 6 months to a year as to the evolving use of U.S. authorities in terms of their efforts to use economic statecraft, economic security tools to combat trafficking. I'd like to touch on just a couple of different case studies and delve into a couple case studies with a little bit more detail. I think there are a couple of important points. One is with respect to the gambling sector actions, that the actions taken by FinCEN and by OFAC were done in collaboration and in coordination with the Mexican government. Just 2 days before the FinCEN NPRM was issued, the Mexican FIU, in coordination with Mexico's security cabinet, included 13 Mexico-based casinos in its blocked persons list, and the FIU, WEEF, added 7 individuals and 24 entities to its blocked person list just 2 days later. I think, there were a few features that were notable in terms of the activities of the casinos and the casino leadership. One was cartel-linked casinos laundered over $2 million through repeated monthly payments, with casino leadership coordinating disbursement across multiple establishments. The payments that were made were structured and concealed through cartel-directed instructions using over 30 bank accounts, small deposits, and avoiding making deposits on consecutive days to evade detection. Effectively, the tools that were used by the casinos and by the cartels that supported the casinos effectively allowed the Sinaloa cartel to launder proceeds through the casinos in effective ways. The Mexican administration has identified that it is working to update its legal framework for the regulation of casinos to close loopholes and to enhance enforcement as well. The action highlighted a couple of just evolving aspects of U.S. actions with respect to Mexico. One is heightened coordination between the U.S. and Mexican government, heightened coordination between FinCEN and OFAC authorities, and a willingness of FinCEN to use a broader set of authorities. I think the same is true with respect to the Cancun-based designations of a human smuggling organization called the Bardwad Human Smuggling Organization. And again, that points to an identification of cartels using a range of companies and front and shell companies across the broadest range of economic activities: real estate, hospitality, energy, tourism, and retail, to engage in human smuggling and in money laundering types of activities. Again, we see this over and over again with respect to cartel activity, that they are diversified. They use a broad range of economic activities to engage in cartel-related activity, but then they all use a broad range of economic activity to launder proceeds as well.
Thank you very much, Him. I see a lot of questions have already started to come through, so we'll just continue on to make sure we have enough time for later. So for our next topic, when most think of cartel money laundering techniques, they think of cash, right? We've seen bulk cash smuggling for decades, where border security is inspecting vehicles and uncovering modifications built to stash significant quantities of cash. But more recently, especially in just the last couple of years, their laundering techniques have evolved in sophistication, and cash is often not even entering this cycle. So, Catherine, can you please walk us through what you're seeing currently when it comes to the various techniques that are now, they're kind of shifting to?
Yeah, that's right. So as him highlighted, there are many diverse methods to launder money, just as there are many diverse methods to generate revenues for cartels. We'll focus on a few key ones in the webinar today. So the ones that we'll focus on are mirror transfers. So this is an evolution of informal value transfer method similar to Hawala, which some people may have heard of, where a transaction is split into parts and the link between those parts is outside the financial system, which with the objective of minimizing detection. We'll take a look at DIGO, which is the use of high value or luxury goods to move value. That's a specific type of trade-based money laundering. We'll touch on crypto, which is used to launder the proceeds of multiple types of criminality, not just by cartels, but for fraud and many other types of criminality as well. On casinos, Him gave a really great outline of some of the actions that are happening in Mexico and in the US and how that action is coordinated. We also have an article available for download where I've analysed forfeiture by the Wynn Casino Las Vegas, which delves into some of the detail on how Chinese money laundering networks are operating or previously operated at the Wynn. And we'll also touch on money mules and how students are targeted by Chinese money laundering networks. So there are also other established methods that continue to be used, like trade-based money laundering, bulk cash smuggling, real estate, high-value assets, gold, precious metals and precious stones, complicit professionals and corporate structures. Once again, there's more detail on all of those in the report. But looking then at, we've touched on Chinese money laundering networks, and they are a key driver and enabler and an evolution in the way that cartel and other organized proceeds are being laundered. So let's just have a look at what this means. So we call them Chinese money laundering networks because they are established. One of their key objectives is to enable Chinese capital flight. Capital flight from China is estimated at about $516 billion a year. That's capital or finance exiting China outside government controls, and that's to all countries, not just to the United States. So China has a restriction of about $50,000 per person per year that can legally be moved outside China. But a lot of wealthy or individual people or wealthy individuals want more outside than that. Why? Why do they want money outside? There's political uncertainty in China, regulatory crackdowns on private enterprise, geopolitical tensions, or they want to fund tuition and living expenses for their relatives abroad or for investments. So what this means is Chinese money laundering networks, to service those clients in China, they need a supply of US dollars and other currencies outside China, like euros or pound sterling, in countries where those wealthy Chinese nationals want value. This creates a perfect match in terms of supply and demand with cartels, for example. They have lots of cash from their illicit activity, and Chinese money laundering networks match that supply and demand. So over recent years, Chinese money laundering networks have become very dominant in laundering cartel proceeds. They offer diversified financial services in many countries. They have very low fees compared to when cartels laundered their own money. So Chinese money laundering networks may charge only up to 2%, maybe even less to the cartels, whereas cartel laundering is maybe up to 10%. So you can see that a cartel, that's very advantageous for them. They have more money available to fund their illicit and violent activities. Chinese money laundering networks are also very fast and very efficient. Sometimes they offer guarantees of delivery. And Lauren touched on how more traditional methods like bulk cash smuggling, that's slow. You have to, potentially it's going to be stolen or seized. Maybe you have to bribe border officials. So some of those other methods, they're still used. All the methods are still used. We're not saying one has completely replaced the other, but there are a lot of advantages to the Chinese money laundering networks. There's two really important points to make here. Like we said, these are called Chinese money laundering networks primarily because they are, or one of their key objectives is to enable Chinese capital flight. These are criminal networks of individuals advantaging themselves at the expense of others in their community. So these are not directed at Chinese people who want to just operate their business or send their kids to school. We refer to Chinese money laundering networks because of the objectives. And secondly, professional money laundering networks are operated by nationals of many countries, not just by Chinese nationals. In the future trends section, I will outline a recent indictment for a crypto laundering network operated by a Venezuelan national, Figuera. So that kind of sets the scene for cartel laundering. Those who have joined our webinars before will know that I've talked about mirror transfers a lot. So we'll keep it very brief on this one. And again, there's a detailed analysis in the report. Very briefly, Chinese nationals want funds in the United States. Cartels have cash. The Chinese money laundering networks match that supply and demand. So the way that this works, if the Chinese national puts Chinese currency, RMB, into a Chinese bank account, the Chinese money laundering network broker releases US dollars within the United States to the nominated beneficiary. And the only link between the two sides of that transaction are encrypted messages like using WeChat. So what that means is each currency stays in its own country. There are no cross-border wire transfers that may attract attention. And how that works is the value has moved from the US to China rather than sending the money. So the next step is movement of that value from China back to the cartel in Mexico. One way that can be done is to buy fentanyl precursors in China or commercial items for trade. They get shipped to Mexico, then they get sold. If it's fentanyl precursors, they can be made into more narcotics. They get trafficked to the United States. So you can see that there is a cycle here that minimizes visible transactional activity in ways that cycle can be connected. So if we look at crypto now, a few key milestones here. So in 2023, OFAC added a crypto address, a wallet. So that's comparable with a bank account number, not quite the same, but similar. They added that to a designation of individuals associated with Sinaloa cartel. And that's the first time OFAC formally recognized that cartels are using crypto for laundering. The DEA seized 2.5 million in crypto compared with 2.2 billion in US currency over 2020 to 2024. So what we can see then is 2.5 billion in crypto versus 2.2 billion in US currency. So crypto is increasingly significant in laundering those narcotics proceeds. With the increasing adoption of crypto over time, what we would expect is that proportion of crypto use is even higher in recent years. And we can see that, as we've mentioned, crypto is used to launder the proceeds of multiple types of criminality, including fraud. And we have a little example there on the slide. So crypto is not just used to launder the proceeds of criminality, but it's also integrated throughout criminal product life cycles. So one example of that we've touched on is fentanyl. China is still the main supplier of precursor chemicals for fentanyl production, though other countries like India are increasing their market share. Crypto can be used, it can be accepted by, I think there's some analysis that it's accepted by 97% of precursor manufacturers in China. And there are still touch points to the financial system. So for example, shell companies in the pharmaceutical and chemical industries can be used as part of that fentanyl life cycle. And the report goes into some detail about what the red flags are that financial institutions can identify. Daigo means buying on behalf of, and this means using high value or luxury items to move value. So similar to mirror transfers, this is a way of moving value rather than moving money. So briefly, the way that this works is, we'll use the example of the United States. So a Daigo, like the actual buyer, buys luxury items in the United States or the United Kingdom. They are lower priced than if they are legitimately purchased in China. The prices in China are higher, and there's taxes and customs and import duties added. They ship the items from the US to Canada, from the US to China, and they are sold there. So this is not by nature illegal, unless of course they're avoiding taxes and duties in China, where it would be, an offence there. But where there's money to be made, then cartels and professional launderers will intervene. And Daigo is now used by professional money laundering networks to launder criminal proceeds. So that might be cartel cash or other cartel financing that's used to actually buy the luxury items, or they are funded by a credit card and the credit card is paid off by criminal cash or wire transfers. So this is a global problem. It's still actively being used. And we had an example just from a few weeks ago, actually, where Louis Vuitton in the Netherlands was fined 500,000 euros, which is about $600,000. They did not properly check the identities of customers who were repeatedly making large cash purchases for their handbags and other items. And in this case, a staff member was complicit in that activity. So they were advising the Daigo buyer how to split purchases to avoid regulatory reporting requirements for cash transactions over 10,000 euros. So as well as the penalty for Louis Vuitton, the buyer and the staff member were also subject to criminal prosecution. The final deep dive or snapshot that we'll cover in this section are about student money mules. So a lot of the methods that we've talked about involve either depositing illicit cash into bank accounts or moving it around, or moving other financial resources around the financial system. And obviously the cartel or the organized crime group wants to obscure the illicit origin or the originator or the beneficiary, to make sure that, in an attempt to make sure that it's not identified as illicit proceeds. So how do they get it into the financial system, and how do they move it around? One method is to use money mules. So often Chinese money laundering networks will target members of their own community, like students. And we have in the US some FinCEN data that shows that, again, over the period 2020 to 2024, 20,000 suspicious activity reports were filed relating to individuals who stated they were Chinese students, representing about $13.8 billion in potentially suspicious activity. These networks are active in other countries as well. So in the UK, an investigation by the National Crime Agency identified 600 accounts at a single financial institution that were controlled by one Chinese money laundering network, and they controlled accounts at other financial institutions too. So why would these students become involved in illicit activity? There's two reasons. One is cultural obligation. So the UK's Centre for Modern Slavery conducted a survey and a study on overseas students, and more than 33% said that they would feel obligated to accept their personal bank account being used to receive money, or to accept packages. So this is small packages of illicit substances. Of those who had been asked to be involved in this, 1 in 4 were coerced, but 3 in 4 were simply asked. So there's a cultural backdrop that's been identified in these studies that makes these students particularly vulnerable. And the other reason that they can get involved is through debt. So we have a slide here that outlines some of the methods that are used. Can we move on to the next one, please? Yes, so the second method is from illegal gambling debts. So these are illegal casinos where the cards were marked. This was a UK investigation again, and there was a covert monitoring of the marks on those cards, which were conveyed to a player, a complicit player at the table, to make sure that the individuals incurred gambling losses, and they were used to control and coerce those students to be involved in illicit activity. So you can see on the left-hand side, there's an actual shot from the investigation where you can see the marks on the cards that are only visible in infrared. So we've touched very briefly there on some of the money laundering methods that are used. Obviously, this is just a brief snapshot of a few of the more evolving trends.
Thank you so much for that, Catherine. So for those that would like to deep dive into these various topics, and I know Tammy, you just requested, specific red flags for each and examples. We won't have time for that right now, but please do head on over to the Docs tab. On the right-hand panel, we have the recent report, which Him and Catherine both mentioned. It's coming in at 71 pages. And it's fleshing out the assessment of each money laundering method along with red flags, associated actions for financial institutions. So definitely a must read for all the folks on today in the space. So, and with that, let's move on now to taking action. So Him, what types of businesses must take action right now to counter these risks? What actions are needed? Are there regional considerations to make note of? Over to you.
Yeah, thanks for that. And first of all, I commend Catherine again on the survey of incredibly deep topics across a range of types of activities that I think all financial institutions and companies and businesses should be aware of. And they should take time to understand the red flags, the typologies, the types of activities that are out there to be able to design effective compliance programs, to understand how best to mitigate risk, and how to put yourself in the best position in case there is regulatory or enforcement action as well. And there are many sources of information, and I think Catherine's report does an excellent job of pulling all of that together from a number of different sources as well. I just want to make a couple of observations about the Mexican risk environment and some of the approaches that we've seen taken by Mexican financial institutions in particular. First of all, Lauren, to sort of answer your primary question is what institutions need to be aware of some of these risks and need to be focused on the risks. And again, it's all institutions, all companies, businesses, private sector enterprises, financial institutions, fintechs, and others that need to be aware of the actions that are being taken both by the U.S. government as well as by the Mexican government, as well as the risks, because the risks are going to flow through your businesses potentially, and there is potentially regulatory or enforcement action at the end of it that you need to be aware of, regardless of whether or not you are a real estate company and focused on the real estate sector, whether or not you're involved in transportation, energy supply, you have brick and mortar businesses around the United States. Around Mexico, or whatever facet of the Mexican economy in which you're engaged, because OFAC has been fairly clear that it is looking at all sectors across the overall economy. And different institutions face different compliance risks. They face different natures of risk and different obligations with respect to what they can do and how they can go about doing it. And so it requires a tailored exercise between financial institutions. There are a lot of challenges out there, but I think I want to focus on a couple of things in terms of positive observations, in terms of positive things that we're seeing in Mexico. First of all, there are a lot of variations between financial institutions and companies in terms of the maturity of their compliance programs and their approach towards compliance. It varies according to the business type and how heavily, like AML CFT issues, money laundering risks, sanctions risk, export control risks, trade and tariff risks as well. What we have observed with respect to financial institutions, that they have largely effective transaction monitoring systems, although there is always a need to continually update your TM coverage, your transaction monitoring coverage. We've noted that financial institutions are generally taking risk-based decisions in terms of managing certain types of exposure. For example, imposing transaction restrictions with respect to cash-based transactions, imposing limits on remittances in terms of understanding what those risks are associated with remittance activity, and then de-risking in certain areas or for certain business lines as well. What we've seen is that a number of fintechs and financial institutions are using innovative data sets to better understand customer behavior and risk associated at the municipality level and the regional level as well, and to incorporate that behavior or that understanding of risk into their transaction monitoring processes and their KYC CDD processes as well. What we've noted is technology has to be part of the solution in combating financial crime. And, many financial institutions are not burdened by legacy core banking systems and are able to implement technology forward approaches to case management, to alert disposition, to matching expected customer behavior with transaction patterns on a real-time basis. So there are a lot of positive things that financial institutions and companies are doing with an appropriate tone from the top and an appropriate culture of compliance targeted at addressing some of the risks that are particular to institutions. Of course, there are headwinds facing financial institutions and corporates operating in Mexico, as Catherine's presentation demonstrates. Mexican institutions and businesses that are operating in Mexico face a complex risk landscape with money laundering networks using increasingly sophisticated tools to engage in money laundering. What is also a significant headwind is that there are just varying risk tolerances across financial institutions and varying regulatory requirements for financial sector participants, which results in regulatory arbitrage as well, and it can be perceived to create an unlevel playing field. Mexican supervisors and its FIU will need to continue to provide consistent, actionable guidance for the financial sector to be able to incorporate information into their controls, to be able to target money laundering activity and mitigate risk and provide highly useful reports to law enforcement on a more effective basis. And I think that there's a need for increased supervisory focus on effectiveness and outcomes. And then, there is a need for greater public-private and private-private information sharing. Financial institutions need strategic information to build a common understanding of risks, trends, patterns, and typologies. But the private sector institutions also need operational information sharing to be able to engage in real-time detection and disruption as well. So there are a number of different areas in which financial institutions and corporates face headwinds, and that it's important to lean into some of those challenges and find remedies for those challenges as well. So what does a private sector need to do to manage risk? There are a number of proactive steps that institutions can take to mitigate risks and to ensure that they're able to demonstrate effective compliance efforts with partners such as correspondent banks and with regulatory and enforcement agencies. I think the first one and the most important one is just understanding your customer exposure. Financial institutions have often just not done lookbacks or customer or transaction reviews to be able to understand their sanctions and AML exposure across their customer base and based on their transaction efforts. And, there are a number of ways to be able to understand your exposure and to mitigate your risks and tailor your programs to those risks. And that's an important facet of it in terms of understanding that exposure. The second is to review your AML program against both Mexican standards, but also against U.S. and global standards, to conduct an AML, CFT, and sanctions gap assessment against your policies and procedures against global standards and U.S. and Mexican standards, to identify whether or not there are gaps in terms of how you are approaching the implementation of your AML, CFT program against international standards, to do an effective coverage assessment, to look at typologies and red flags, and to ensure that you have appropriate coverage for your transaction monitoring system, and then to do a model validation to be able to understand whether or not your transaction monitoring programs, whether they're AML, TM systems, or sanction screening systems, are effective. I think the goal here is to understand both good news stories and to recognize challenges and shortcomings to ensure that you have a pathway to be able to address some of those challenges. Consider participation in private and public-private exchanges, either directly with your counterparts or through associations and industry groups as well. And the last is to engage proactively with regulators, both in Mexico and potentially even with U.S. Regulators as well, to be able to understand expectations and to be able to mainstream those expectations into your programs. So what are some of the areas of focus for Mexican financial institutions? One is just in understanding the important role of data. Know your institution's data sources across the organization. Utilize both those internal and external data sources, including advisories and guidance and third-party intelligence vendors, to be able to understand what your risk is. It's very important to take a look at the range of OFAC actions, FinCEN actions, DOJ actions, actions by the WEF and by CMBV as well, to be able to understand red flags and typologies, and just also ensure that you have accurate and up-to-date data and it's managed effectively. The second is just leaning into KYC rules. Gathering accurate KYC information is just critical for monitoring investigations and ongoing due diligence. It's just not a one-time exercise, and you need to refresh based on risk, incorporating transactional patterns, and an understanding of the customer as well. The other thing that's important with respect to KYC rules is just lean into the business line knowledge. They have the relationship with the customers, and if you're a compliance program manager or a CCO, it's important to engage proactively with the business lines to be able to understand what they know about their customers, what they expect from their customers, to be able to incorporate that into your overall program. The third is just focus transaction monitoring rules on higher risk activities. Identify the applicable AML and fraud typologies. And again, Catherine's report is incredibly helpful in this regard, with a focus on linkages to cartel activity, to precursor chemical activity, and linkages to China-related trade. Incorporate those AML and fraud typologies and red flags into your TM coverage assessments. And then build and test your TM models for effectiveness and expected outcomes as well, and to make sure that they actually work. And then ensure that you're leveraging anticipated activity from KYC into the models. So there are a broad range of things that companies can do and financial institutions can do to be able to understand that risk. Just to be efficient in terms of the discussion and presentation, and to be able to get to some of the questions, I think that, in terms of there are different perspectives and focuses for financial institutions and for corporates, depending on where they are in the greater financial ecosystem. Fintechs face different risks and considerations from payment aggregators, from financial institutions with brick and mortar outlets and retail outlets, from companies that are engaged in retail activity and do a lot of transactional activity with respect to China-related trade, where you might have supply chain-related risks. To transportation companies that may have different risks from an immigration or from a customs-related perspective. So I think the key takeaway with respect to the last couple of slides that I had were that it's important that your regulatory framework may not be as mature in terms of what you might be required to do. It's important to look at the risks that your institution faces across the range of AML, CFT, sanctions, tariff, trade, and export control risks, to be able to understand what your exposure is, and then in terms of being able to tailor your program in a way to mitigate those risks effectively.
Wonderful. Thank you so much, Him. Now, Catherine, what about in relation to cartels and Chinese money laundering networks more broadly? What actions are required for financial institutions?
Yeah, so he was given a great and very comprehensive, detailed analysis of what is required. So let's convert this into 5 actions for financial institutions. The first one is to update and maintain the institutional risk assessment. And as he mentioned, what this is aiming to do is to understand how these risks manifest for this specific type of institution. So a retail bank may be looking at the risks around large or structured cash deposits at its branches, as well as the movement of larger financial flows that could be consolidated illicit funds being moved by a wire transfer. An MSB or a payment processor, they're more transaction focused rather than account or relationship focused businesses. We've seen MSBs being used for payments for precursor chemicals, for example. And crypto businesses, they might be looking at how cartels often launder using stable coins. We can come back to that a little bit in the Q&A when we talk about the figure indictment. As with all institutional risk assessments, they should also be thinking about clients, geographies or jurisdictions, products and services, and delivery channels as well. So step 2 is to make sure that the processes are well designed and continue to operate effectively. So design and operation. Him has given a great analysis of what this might look like. The key point here is these controls should already be in place. Things like client due diligence, transaction monitoring, investigations of unusual activity, and a key point is the use of data and analytics. So what's necessary here is to make sure that they are tuned and configured to recognize cartel and professional money laundering risks. Role-specific training is also really important. You can have great systems, you can have great policies and procedures, but unless your staff know what to look for and how that applies to their job, it's not going to be effective. So again, this is about configuring it specifically to the institution, its geographies and its clients, as well as to groups of staff. So branch staff, for example, might be trained to recognize signs that a customer is being used as a money mule or is trying to structure deposits. And as he mentioned, we've seen that this applies not just to banks, but to other types of businesses as well. So he mentioned transport, also luxury goods, as we saw during the Daigou example. If it's for compliance staff, maybe they need to be trained on how to configure their automated controls so that they recognize how chemical abstract numbers, it's a way of identifying precursor chemicals, can be used to identify unusual transactions. And we've got examples of that in the report going into more detail. Regulatory guidance, threat assessments, and other key informations are used to inform the previous steps 1 to 3. Him outlined a few already. We also have an article, I think, in the download section, which has the top 10 resources for financial institutions. These are actionable resources that banks can directly take action on. So that's a signpost to other resources, and public-private partnerships and information sharing initiatives, which Him covered very comprehensively in his section. So I don't think I need to add any more to his comments on that one.
Okay, thank you so much, Catherine. Appreciate you both trying to move things as quickly as possible, given all the questions we've had come through. So as we turn over to the Q&A section of our webinar, we do have some questions for you. You should see a survey pop up on your screen. Please answer, just take the time for these few short questions as we really value your feedback. In particular, one question on duration. Should we be making these longer to handle all these questions? So anyways, we'll get started. First question we'll address is for him. During registration, me, a financial crime risk senior investigator at a large global bank, submitted the question, how does AI help combat narcotics and human trafficking?
Thanks for that, Lauren. That's a great question. I think that artificial intelligence is incredibly important for financial institutions to consider implementing into their overall transaction monitoring frameworks. With respect to human smuggling and human trafficking, I think it's true across the board. With respect to AI, it can be used to link fragmented signals, behavioral anomalies, network patterns, and cross-border identities as well, to be able to surface trafficking indicators that might be difficult to parse or that might be opaque with respect to manual review. An effectively trained AI algorithm with respect to human smuggling typologies can be effective in terms of being able to identify risks and activities that you might not otherwise be able to detect. And so with respect to many of these typologies, I think that Catherine has outlined that the use of AI tools can provide a positive in terms of being able to surface activities or risks that might not otherwise be caught through traditional transaction monitoring tools in a rules-based system, but they also will be able to reduce the number of false positives. So yes, I do think AI can serve an important purpose in this regard.
Okay, thank you, Him. Catherine, this next one's for you. Gareth, a financial investigation manager, has asked, are you seeing Chinese money laundering networks dealing with criminal funds from Russia? And are you seeing anything in a particular cryptocurrency?
Oh, that's a great question. So we see Chinese money laundering networks operating in multiple different countries, including, as an example, the United Kingdom. We also see in some of those countries Russian language laundering networks operating. So in the UK, for example, the National Crime Agency did a really excellent investigation called Operation Destabilize into a Russian language network using crypto. And we also see Russian operated or crypto exchanges with Russia links operating with low or no KYC requirements that are being used for a lot of laundering and sanctions evasion. So it's an interesting question, and I don't think we have data on this, touching back to those opaque financial flows of whether criminal funds from Russia are being laundered by the Chinese operated money laundering networks, or whether they are tending to go through like the Russian language or Russian associated crypto laundering networks. It's a great question. I think at this point we can see that the money laundering networks and the criminal flows overlap in the jurisdiction, but I'm not aware of any data that assesses the kind of division of those criminal flows between the different types of professional laundering networks.
Thank you, Catherine. Gareth, hopefully that helps. Him, back to you. Adam asked in the chat for your thoughts on the most recent FinCEN guidance regarding beneficial ownership certification at account openings. Oh, I'll just unmute you real quick. Okay, you're good?
Yep. Thank you for that question. It's a good one. First of all, I think as the discussion today shows that UBO information is incredibly important, first of all, and that goes without saying in terms of being able to understand who's behind front companies or shell companies that might be used to hide illicit funds. So that's an important point. The FinCEN issued an accepted relief order in a couple of weeks ago that amended how financial institutions apply customer due diligence, the CDD rules, BO requirements. Under the relief, covered financial institutions are no longer required to identify and verify beneficial owners at every new account opening for the same legal entity customer. So the type of relief that's been provided is focused and narrow, but it does emphasize the need to collect and verify beneficial ownership information in various circumstances at the initial account opening, where there is a trigger event, where the institution becomes reasonably aware of facts that may reasonably call into question the accuracy or reliability of the beneficial ownership information that was previously submitted. And then as part of a risk-based overall CDD review as well. I think that the FinCEN accepted relief is an important one in terms of modernizing the overall BSA framework and reducing costs for financial institutions where they may not be a risk-based need to do so. But it does emphasize the point that financial institutions should be looking at and collecting beneficial ownership information and doing refreshes where there are trigger events and where there are risk-based needs to do so as well. And so I think that it is an important piece of acceptive relief in terms of providing relief to financial institutions in terms of reducing costs. But at the same time, one shouldn't lose sight of the fact that UBO information needs to be collected and understood in terms of ensuring that you are understanding the risks that your institution faces. And I think the acceptive relief emphasizes that as well.
Thank you, Him. Unfortunately, we only have a few minutes left, so we're going to hop on over to our final topic of future trends. So, Catherine, starting off with you, what trends do you expect over the next year in terms of the evolution of laundering methods?
Yeah, so I think we've got a couple of bullet points here. Greater use of crypto, that's based on the use of DEA data that we saw reflecting an increasing use of crypto for laundering, and I think that's wider than just narcotics trafficking. We had a whole bunch of questions come in during the pre-registration about use of crypto as well. Greater professionalization of money laundering, wider use of diverse methods like DIGO, and in part that's driven by professionalization because those professional laundering networks can operate multiple different sophisticated money laundering methods, and other sectors being vulnerable as well, which I know Him touched on, and we touched on the Louis Vuitton example. What I want to do to answer some of the questions about crypto is just talk through a recent indictment called Figuera. This is a Venezuelan national, and it's an indictment, so innocent until proven guilty in court. But this is a network that laundered $1 billion globally, allegedly. The cash was deposited mostly in non-US banks. It was converted to USDT, which is Tether on the Tron blockchain. So that's a specific indicator on the way money is laundered using crypto. And it was then moved through multiple crypto wallets and networks before it arrived in this network's kind of omnibus aggregate wallet. So this is comparable with layering in fiat transactions, and it's a hallmark of crypto laundering methodologies. That an OTC crypto broker or liquidity provider was used to convert the dollars into US bank accounts held in shell companies. So an OTC broker is a broker that offers customized services rather than a public exchange. And those shell companies were held with US financial institutions. So some touch points there to the traditional financial system. Figuera actually specifically referenced the Chinese networks and said that he has excellent technology and tools too. And the fees for each step in this process depended on the options used and depending on the level of risk associated. So very brief outline of a recent insight into laundering using crypto, which hopefully answers some of the Q&A questions.
Thank you, Catherine. Him, what about you? Future trends?
So one key element is that there will be continued regulatory and enforcement risk. The Supreme Court recently decided a case that limited the president's use of tariff authority under national emergency authorities, under IEPA authorities, and I'm sure many of you are familiar with this decision. I think one of the outcomes of that is that it will constrain the use of tariffs as a tool for taking action. And so as a result, one expectation may be that the administration uses a broader range of economic security tools, whether they be FinCEN actions or OFAC actions or other authorities as well, to be able to emphasize the importance of risk mitigation and compliance with respect to cartel activity, money laundering activity, and fentanyl precursor activity as well. So there will be continued focus and risk associated with the U.S.-Mexico relationship, and particularly financial transactions and other activities that have touch points with cartel activity, fentanyl precursor activity, and the like as well. So, to the extent that there is this continued risk, it's incredibly important for institutions and companies to take a hard look at their customers and their exposure, and to think through ways to mitigate that risk as well.
All right, thank you so much, Him. And that brings us to the end of our time today. So Him and Catherine, thank you so much both for your time. And thank you to everyone that joined us live. We hope you gained value from what was shared today. Unfortunately, just as always, we never get to all the questions. So I think we might have to do a secondary session just following up, doing rapid fire Q&A, just answering all the questions you've submitted because they are really great. And so apologies again, we haven't gotten to get to them. You'll all receive a follow-up email tomorrow with the recording of today's session. The deck will be included. I know a few of you asked about that, as well as some additional recommended reading and a link to our upcoming webinar. In a few weeks, we'll be sitting with HSBC and Synthetiker on AI, advanced analytics, and synthetic identities, another growing threat to financial institutions. So thank you all again, and we hope you'll be able to join us again soon.